Hey guys, it's Hassy Trades here, and welcome to a new video. Today's video I'm going to go over CPI data, what to expect tomorrow, and what this means. Is it tomorrow the day of reckoning? Let's find out. So guys, let's start off with the last four CPI data results. Actually, let's explain to you guys what CPI means. If you did miss one of my last videos, I did explain it. But CPI stands for Consumer Price Index. And it basically measures the monthly change in prices paid by US consumers. So, Consumer Price Index. This is a tool in order to measure inflation, deflation. Again, this is used by the financial market to gauge inflation, by the Federal Reserve to calibrate its monetary policy. The reason why it's so important is obviously higher inflation means the economy is not doing so well. Again, this causes a rise in interest rates. Um, but yeah, now that you know what CPI more or less stands for, I'm going to show you the last four times CPI came in. So let's start off with probably the highest CPI result, which was 9.1% in July. This was for the month of June. And I'm actually looking at this. I'm surprised it actually didn't drop as much as they did. But yeah, it was a red day for the SPY on that day. Obviously, CPI coming in so high, that's just expected. So we dropped from 385 all the way down to 373. That's a huge drop for SPY itself. But surprisingly, after that, we went on a run all the way towards 431, which is a really big surprise. And within that comes, and probably the main reason to why that is because of August, which was the CPI for July, 8.5%, much lower than the previous month. As you can see, we did make a move from 410 all the way up until this 420 area. Again, that was a good day for SPY. We ended green on that day. I ended up hitting the top, as you could say for now, in 430s. This was all the way in August. And again, after that, we had the September CPI, which was for August at 8.3%. Again, CPI is just coming down every single time. Again, marked it here. However, this time, look at that drop. We dropped all the way from 415 all the way down to 390. I think the expected was lower than we got. I'm sure was higher. I'm not 100% sure, but we did have a huge drop, which again just begs to ask the question: what will happen tomorrow? I'm personally expecting CPI to come in 8.1%, 8.2%. So the general consensus is the fact that it's going to come in between 7.8 to 7.9%. But I do believe it'll come in slightly higher. They need to raise interest rates. They need to get this economy pumping again. Of course, with the rising gas prices, with the current what's happening with America, what's happening with in Ukraine, the Ukraine and Russia tensions, etc. It just adds to the pressure to the government. But yeah, if you look at the last month's CPI, which was for September, came in at 8.2%. Again, the market moved up by quite a bit on that day. We ended green. We obviously had that bottom around 348 and bang. We had a nice push to the upside, and since then we have been rising. Now we're in a pivotal area, in my opinion, probably the most important area for the market. With the last four CPI data, we haven't had that. Apart from that one day, we haven't had that major flush. And now that we are approaching a key area of supply, and if you look at the daily candle, we are seeing rejection. Of course, it's hard to say, but it does look bearish in a technical standpoint. We could see a pushback down to the 356 area, depending on how CPI comes out. Would I be a gambler and say you should go all out on CPI, start playing stocks? I actually recommend sitting back and not touching anything. I don't recommend it at all. But knowing that we are rejecting this area of supply, we could see something like this form. I'll quickly show you guys. So if this candle opens here, we could see a push back down towards here, into pre-market, and then we could see a push back up and test. But if CPI does come in how much higher than expected, we could just see a flush straight down, and it could be quite bad. So if this does happen, I would trade, if I'm being completely honest with you. Let's just look at a couple of websites and there what they think about CPI, what they expect. So the first one is credited website, CNBC, which is used by a lot of financial people. So according to Mike Winters, he wrote an article saying how it's expected to remain high, and the forecasts are expected to barely dip below the 8% year on year rate. So we will be in the same range. Again, if you look here, guys, as I said, 7.9% it's predicted to be at. I do kind of believe it will come in higher. With it being 8.2% in September, and there's not been a real change in the economy, I feel like. There is a rise in a lot of consumer goods, a lot of basic necessities, and now with the rise in interest rates, they need to rise the interest rates. The reason why they need to rise the interest rate is to lower consumer spending, lowering demand. Again, most of these things will lead to a recession, and in order for them to stop a recession, they need to raise rates. But CPI predictions by some of the top places, again, top companies, top institutions: Barclays 7.8%, MS 8%, BAC 7.8%. So the general agreement between these places are that we will range in between the 7.8 to 7.9%. So it will be interesting. But for me, in my opinion, tomorrow's CPI report is make or break point for the Fed pivot. If inflation does come in hotter than expected, the panic will worsen amongst the consumers, amongst the people in the stock market. Again, from the way the Fed has been approaching the situation, it seems like their biggest fear is not raising interest rates enough, just raising rates in general enough. And considering that they do want to do this, I do expect a higher CPI to come in. By the end of the year, I do expect SPY to be in the lower threshold of 320. However, if CPI does somehow come in around the general agreement, which is 7.9 to 8.1%, I do expect SPY to push back towards this 390 area, 405 area, and we might see a potential push to the 430s, which for me will be shocking. And I would be quite surprised, but if you don't know these days, the Fed, is it something they're trying to do to cause even more panic? Are they trying to just kind of trick the people in the stock market? My general thoughts is that we will go down, but it's a matter of when, which is really hard to kind of predict. Again, like I said, the higher inflation equals higher interest rates, which again means borrowing costs become more expensive for consumers and businesses, which again means less expenditure on items which are not necessary for the average consumer. Again, this will result in companies becoming bankrupt. All of this just points to one signal, which is a recession. Less cash, less expenditure. So the Fed does have to reduce rates to keep this under control and stop any recession from happening. However, that doesn't seem to be the case. I feel like the general agreement is that they do want to rise the interest rates. But in my opinion, guys, do not go for the long haul. Do not focus on long-term investments in growth stocks, because I do feel like we are coming down. The economy globally, not even just, I'm not talking from an American standpoint, we are leading to a dark time. Honestly, it is quite scary to see in that sense. And I'm not an expert in this by no means, don't get me wrong, but it doesn't take a blind eye to see what's happening around the world. But yeah, tomorrow my prediction is 8.1 to 8.2%. I could be wrong. I don't have the necessary knowledge to really go in depth on this, but this is my opinion. and what I feel like will happen. Again, from a technical standpoint, we are rejecting a key area of supply. We are making a higher low, even though we are making lower highs, but this could see maybe a little fade and then pop, or even a pop and fade. But it's all dependent on that CPI. It's all dependent on that report. What will that report tell us? Again, let's just quickly read this article and what will happen. So obviously, like I said, they do want it to be coming around 7.9 to 8.2%. What is happening? Like the Fed is nothing but leading to a higher rate of interest. Again, in order to do that, they need to increase inflation, stop consumers from spending as much. But yeah, you got other sites like Market Insider that are saying that October CPI could spark a 6% move in the S&P 500. That's an interesting take. If you could read more into this, again, this is written by Matthew Fox. So CPI report could drop bigs in a big way if expectations are not met, according to JP Morgan, someone who's credible in the business space. This is quite interesting to read. Honestly, they do, so they economic people, they do expect a 7.9% in general. So it'll be quite interesting to see. It's just I would not trade in this market. I wouldn't. When I want to trade, I don't want to leave my entries because of something I don't know about, or something which I'm not really 100% on. I want my entry to be perfect. So by that, I do think tomorrow, if you are trading in the large cap world especially, I wouldn't really look to take any gambles. Wait for the CPI data to come out, relax, and really don't overcommit, don't panic. If you're a beginner, just chill, relax. But yeah, guys, hopefully tomorrow we don't see such an abrupt change in the data, and we don't see a huge, 8.4, 8.5%. If that happens, it's tank. But yeah, guys, I hope you guys enjoyed this video, because I'm not really someone who goes into the macroeconomic side of stuff. I quite enjoy doing these. I quite enjoy the research. So guys, thank you for joining. Hit that like button, subscribe, guys. And yeah, I'll catch you in the next one. Thank you, guys.